So welcome everyone to this really fascinating webinar today. My name is Simon Newman. I'm the CEO of the Online Dating and Discovery Association. Delighted to welcome Nick Tubb from Navro, and I will hand over to Nick in a moment to do a short introduction before we start getting into a really detailed discussion on an issue that is clearly causing a lot of concern amongst our membership and other firms in the sectors as well. And that is, of course, the issue of debanking. So we'll be asking Nick about what exactly is debanking and what sort of the things that our members can do to hopefully de-risk themselves to avoid it happening to them as well. So just a quick reminder, first of all, for those who are joining us, and particularly those joining us for the very first time. So welcome, first of all. We will be recording the webinar today, so a copy will be available to everyone who has registered. If you would like to ask a question to Nick, please do so. If I can ask you to use the Q&A function, that'll be really helpful. I will monitor that during today's webinar, and that makes sure that if there are any questions that Nick can hopefully answer during the webinar, we'll put those to him. But we'll hopefully build a little bit of time at the end as well to allow you to ask any questions. So Nick, I'm going to hand over to you first of all, if you'd like to introduce yourself.
Thank you very much, Simon. Yeah, hello everyone and welcome. Thanks Simon for involving me in this conversation. So I'm Nick Tubb. Indeed, I'm the Chief Revenue Officer at Navro. Navro is an EMI licensed in the UK, Europe, and overseas as well. And it issues accounts and offers payment services to companies across various sectors, including mainstream sectors like payroll and pensions, but also dating and digital applications as well. My background has always been in payments, and in some cases with neobanks, so account issuance and that kind of stuff. I've also had several years working for card acquirers, as well as e-commerce PSPs, across a wide range of sectors, mainstream and what are typically deemed higher risk sectors as well, including gambling and forex and regulated sectors and dating and adult as well. I've always been in commercial roles, so I've always been the one advocating for customers and having those conversations with compliance teams around how we as businesses become comfortable with different profiles. So very happy to be here.
Brilliant, thank you, Nick. What fantastic experience, and I've got lots and lots of questions to ask you. So we'll start off with the basics first of all, and just for anyone that may not be hugely familiar with the subject matter, I mentioned at the beginning this is about debanking. What is it, and why is it a problem that we need to address in our sector?
So very simply, debanking is essentially the removal of banking services. It can even mean the offboarding of companies, and so the complete removal of all services. But of course, there are other elements to this as well. It could be the refusal to offer banking services in the first place upon application, or it could even mean the partial removal of banking services as well. So, for example, payment services to certain jurisdictions around the world. It's an issue because banks typically take the view that certain sectors, rather than certain company profiles and individual characteristics, sit in certain risk buckets, and therefore they can be indiscriminate in terms of their actions, debanking or removal of services. That's why it's an issue, specifically for this sector.
Thank you for that. Yeah, and how widespread is it? Because I know it's something that lots of our members have raised with us independently. We're starting to hear more and more about it. Is it getting worse, and what's driving it if it is getting more problematic for our sector?
Let me start then with perhaps some reasons why your sector is seen as high risk by banks. There are several elements to this, and I'll talk about sort of trends we've seen recently as well. So there are some characteristics of the sector, sometimes for specific companies, sometimes the sector in general, that place it in a higher risk bucket for many banking institutions. One of those elements is the subscription payment model. So the subscription payment model is used by nefarious characters, sometimes to launder money, whether that's subscriptions for, it's always digital products, but it could be ebooks, it could be fitness schedules, And actually, fake dating sites have been set up for that reason as well. On the consumer duty kind of angle, there are, of course, companies with subscription models that make it very, very difficult to exit from a particular payment schedule as well. And then also associated with the sector, there are, there are incidents of romance fraud as well, where, people who are, in good faith looking for connection and love can be seen, have to be almost by definition in that process, making themselves more vulnerable, and they can be taken advantage of as well. So there's all these kinds of activity that are associated with the sector, and then unfortunately the sector is sort of tarred with the same brush because it's a simple SIC code or an industry identifier that kind of places you in that bucket. And then the final thing I would say is what banks care about is particularly being implicated in any money laundering, being implicated in any tax evasion, but also being implicated in customer fraud or poor customer duty. And the other thing, from a reputational perspective, that they care about is being implicated in the provision of adult services. So many of them have a hard no for that. And when it comes to the dating sector, it's expensive and burdensome for them to monitor individual companies, to check behind account logins and everything else, that there is indeed sufficient monitoring to make sure that nothing adult is being there's no adult activity there, and that's obviously quite difficult for them to do. So those are some of the reasons why they place the sector in this bucket.
Quite a few reasons then, Nick. It sounds almost a bit like a storm. Lots of contributing factors, perhaps not one on its own as a single factor, but together that's causing the banks to make those decisions to say this, in our view, is a sector that's too risky to do business with.
Exactly. And rather than, and this is the difficulty, rather than look at different individual company profiles, they're just bucketing everyone in the same sort of risk classification, and then it's problematic for everyone.
Brilliant. We'll come back to that later on, I think, in terms of that classification and what things that we can do as an association, but also our members as well. One of the questions I just wanted to ask, the financial service sector is well known for being one that's very, very heavily regulated, and I'm just kind of interested about the broader sort of regulatory context behind this debanking trend, if you like. Your experience in banking, I'd just be interested to hear more about the legal side of things, the legislative side of things that are behind this.
Certainly, yes. So it really, since the global financial crisis, there has been increased regulation across financial services, and I think it's almost a bit of a perfect storm. So in the last 15 years, a lot of the regulated kind of areas of life, such as gambling and forex and CFDs. And obviously the emergence of crypto as well. There's just been increasing regulation around the world. It's obviously a commercial opportunity for jurisdictions as well to introduce a licensing regime, and therefore it becomes increasingly expensive and increasingly burdensome for banks and other financial institutions to keep up with all that regulation, and then to make sure that they're aware of all the latest updates and monitoring for all breaches, and it just becomes sometimes commercially unviable for them to do that. There's also been a proliferation in the last 10 years of electronic money institutions, particularly in UK and Europe, where, and I will get on a bit later into the sort of benefits of that, but one of the consequences of that is that there's been a large number of newly licensed companies that also require a lot of compliance and governance oversight from the bank. So, I'm sure in some banks the compliance teams are larger than the commercial teams because it's such an issue for them. But it is in the context of just global increasing risk management, compliance, regulation. A lot of rules to follow and keep track of.
Yeah, absolutely, and I guess on the back of that as well, as you kind of referred to there, our sector has not been without challenges from legislation as well. The Online Safety Act here in the UK, lots of work going across the European Union, Digital Markets Act, Digital Safety Act and so on and so on, Services Act, sorry, there's a huge amount of regulation, and again, I guess the need for compliance teams in banks to try and keep on top of that. I guess I understand where that comes from as well. And something we raised as an association. I understand there's some new legislation that came into effect earlier this month, which hopefully means that banks now have to give more notice to closing bank accounts down, and also giving to some extent a reason for doing so, rather than what we've seen historically of just saying that's it, end of business, and we'll no longer support your customer anymore.
Yes, it is obviously a positive move, and places some more responsibility on banks. I did talk to a couple of banks around whether they had increased account closures and increased debanking activity sort of in the months preceding the new legislation. They claimed not to have, but they probably would. But obviously, generally, it's a positive move. I think, in fact, from this week, increased protection has been offered to customer accounts and small business accounts as well in the same way. So I think notice has just increased from 60 to 90 days. And as you say, it is now a requirement that if you are debanked, a specific reason must be given as well. And I guess there is access to a financial ombudsman in the UK if you disagree with the decision, but that's never going to be a quick or necessarily effective method of challenge.
But I guess, even then, 90 days is still quite short. And I guess the challenge is that the business that's faced with that decision to effectively close their bank account down, has a very, very short period of time to find an alternative provider without impacting business. And I guess one of the things that we are concerned about as an association is that either means potentially higher charges because of the risks associated with it, or the alternative is to find a provider in a perhaps less regulated or less well-regulated country, where that exposes even higher risks and creates even more problems going down the line. So I think we welcome a longer period of time, for banks to give notice, but also recognise it's still very short in reality, given the complexity of getting bank accounts up and running.
Absolutely, it is. And for anyone listening here who's tried to open a new set of banking services with an alternative bank, 90 days just goes like that, especially in a sector where they might see it as high risk. What they call the enhanced due diligence process lasts a very long time and is sort of forensic in detail, and you have to provide all kinds of documents and proof and validation of how you earn money and who pays you and where do you pay and what currencies do you deal in and all that kind of stuff. And then obviously the normal sort of know your business requirements around providing information about who owns the business and identifying and validating everyone's identity as well. So it is a lengthy process, and you're absolutely right. If you try and approach a major bank, especially a major global bank, then 90 days is an impossibility for boarding. And that does then push you into solutions that are more expedient. But then the issue with that is, as you say, it might push you to either a bank or an intermediary like an electronic money institution. First of all, that might have almost by definition less robust governance, will obviously not have as good a balance sheet, will perhaps not have the breadth of services that you require. So especially if you are a multi-country organization and you need access to international banking services, if you have to go to a smaller bank, it's quite likely that they're not able to offer everything that you require. They also tend to have higher charges because they're well aware of the fact that they are almost the last resort, or they are, or that they have the leverage because you need something done quickly, and therefore you're going to pay for that. So those are all dangers. And also for decent, well-run companies with well-managed risks, etc., that just happen to, for example, in the dating sector, that just happen to be falling into a sector that is generally overall seen as higher risk. it's unfairly penalizing for them as well.
Yeah, and on that, it's interesting. I mean, we wrote to the Chancellor about this issue and saying it's one of those challenges that disproportionately impacts smaller firms in particular, because their focus quite clearly is on running the business and making profit and keeping them, the lights on at the end of the day. This is a huge distraction, a huge administrative burden, and a significant cause of stress for those small business owners just trying to compete in a competitive marketplace. So that's why we wrote to the Chancellor and saying that in our view, kind of the approaches that the banking sector taken were in many ways anti-competitive and not good for economic growth, which we know is the UK government's big priority. Sadly, the response from government was it's a banking issue, not one for government to intervene, which we were somewhat disappointed in. But that's a sort of separate point. The one thing I just wanted to ask you, Nick, I mean, we've been talking about the UK quite a lot, but is this an issue that's specific just to the UK, or is it actually something that happens in the rest of the world as well?
So my experience is mostly UK and Europe. I can say that UK and Europe are relatively similar, I would say. There's obviously a homogeneous licensing and to some extent banking regime across Europe. And so standards tend to be generally similar across countries, but there are definitely sort of tier 1, tier 2, and tier 3 jurisdictions for licensing. So you'll have gold standard in the Netherlands or in Ireland or somewhere like that, and then maybe some of the smaller like Baltic states or Mediterranean countries will have a less onerous process, let's say, of getting a license. So there's there are some differences there. I'm less familiar with the US, but in my experience, the US tends to be more risk averse than the UK and Europe. So, and of course, every country has their own laws around certain regulated activities, and it's driven by that more than anything else, I would say. But acquiring banking services in the US, especially a bank worth its salt that's going to give you an array of services rather than just sort of a local state bank or something like that, or a county bank, is pretty difficult, especially if you're in a higher risk sector.
Wow, that's incredible. No, thank you for that. So it seems to be that it is very much a global issue, but it varies depending on which region you are in around the world. So not just affecting companies that operate here in the UK. Thank you. Going back to this point about the reasons that banks give for exiting kind of dating services from accessing those bank accounts, etc. Again, we hear a variety of different reasons. Some seem more legitimate than others. Some have talked about, as I mentioned earlier, regulation and confusion or uncertainty around the current regulatory landscape. But I'd be interested in sort of your view on whether you think some of those assessments are fair. But it strikes me that in an industry, certainly if we look at the UK, 5 million adults alone are on online dating apps. That's around about 10% of the adult population. The industry contributes in excess of £400 million a year to the UK economy. It's a pretty big chunk of the tech sector. And yet, it seems to be a carte blanche approach that firms in the sector are being told, no, we no longer want your business. So I'm just kind of interested in hearing, what are some of the reasons and whether those assessments that the banks are making, in your view, are fair.
So you're absolutely right. I mean, dating app spend sits, in terms of everyday consumer spend, sits alongside ride hailing or food delivery. It's part of people's lives, but unfortunately, it's not seen by that seen like that by the banks. They see it, they bucket it up with gambling or other regulated activity. I think the main issue, as I've said, is that there is this kind of carte blanche and non-subjective sort of evaluation of companies. What banks should be doing, and this sort of leads me on to what you can do maybe if you are in the sector and you want the the greatest potential chance of success, if it's not a flat no, because every bank has sort of low risk, and then they have high risk, and then they have prohibited. And dating doesn't often sit in a prohibited sector. Yeah. Adult probably would, but dating is always high risk, and therefore what a good bank should be doing, rather than sort of saying, well, you're high risk, I can't be bothered to go through the efforts and expense of boarding and ongoing monitoring. What they should be doing, instead of asking what sector are you in, they should be asking the question, how do you manage risk? Are you aware of the risks to which you are exposed, given your business model, given your sector, given your location, all that kind of stuff? And then can you demonstrate how you effectively manage that risk? So, for example, if you are in, if you have a subscription model, for example, then can you clearly show me that it's easy for a customer to sort of extricate themselves from a subscription thing? And can you easily demonstrate to me that everything is clear and transparent, and no one's being sort of suddenly going to be surprised by a much larger amount being debited from their account? And then are you aware of the risks of kind of direct communication within your site? And what do you do to ensure that there is nothing going on that could resemble adult or could resemble scamming? Do you have any software or people monitoring to make sure that everything is I guess any policy you have is effectively executed? That's what banks should be looking at, and that's what I would recommend to any firm that's trying to get access to banking facilities, or indeed has them. And is just to have that pack and regularly updated, maybe quarterly updated, just to show that you understand the risk, that you manage the risk. And like I said, the other thing I would say is, if you do have banking services and you don't want to trigger a review, you don't want to trigger a big red buzzer going off in a bank's compliance department, then the advice would be, make sure that if there's any change that you feel might trigger that you give the bank advance notice. And I guess an example might be, when you are onboarding, you give the bank a profile of the business. So you tell them roughly what kind of value flows are going to be going through your accounts, where the money is going to come from in terms of sort of profiles of company or customers, where they're based geographically, and then where you expect the money to go out of. Because banks will record all that information and have it attached to your account in the background. So if you, for example, open a new line of business and then you're getting money in either from jurisdictions that the bank wasn't expecting or from customer profiles that the bank wasn't expecting, that's the kind of thing that will will get that big red buzzer going off and have them asking questions and reviewing things.
Brilliant. That's fantastic. We'll come back to some of that, but I think I like the idea you've made, or the point you've made there about advance notice. So effectively not spooking the bank, scaring the bank when something different happens for whatever reason, that just, as you say, sets off those alarm bells and the compliance teams and so on. Exactly. One question is going to ask you, it's kind of popped into my head. In the olden days, I guess, there seemed to be, probably less reliance on perhaps algorithms, and that relationships were more, human, in the sense that you would speak to your business partner and have a detailed conversation about your business plans, your proposals, etc. It seems to me that that's less so these days, and that a lot of the decisions are based on what a computer calculates. And maybe perhaps there's less ability for relationship managers within banks to kind of challenge decisions made by technology. Is that a fair assessment by me, or is that a little bit?
No, that's absolutely a fair assessment. I would say it's no secret in the perennial search for cost cutting. Absolutely, the cost of humans is far greater than the cost of technology. So, yeah. But for all but the valuable customers of banks, there is often a far less satisfactory way of communicating with them, and far less closeness in terms of their knowledge of your business. And the answer, I guess, to this on occasion can be, take a look at some of the intermediaries. Yes. So if you don't have someone at the bank who understands your business and is managing your account and you have a good understanding with, You can, of course, go to a smaller bank, but not be able to access all of the services. But you can use an intermediary. There are, as I said before, there are a lot of electronic money institutions out there. The quality of those electronic money institutions will be revealed, I think, by the banks that they have supporting them. So if one has 3 major global banks that offer them the service to give to their customers, accounts and payment services, that's a pretty good sign that EMI has good governance. Obviously, that they are subject to the bank oversight, and it's great for banks because they can outsource the compliance burden and expense to a firm that has a much more streamlined way of doing it, but satisfies their requirements and their governance standards without them having to have 20 people and 6 months looking into something. But if you go to one of those intermediaries, then they are by definition much smaller, and you will therefore by definition be sort of more significant to their P&L, and you're much more likely to have someone there that knows you, understands your business pretty well, and is available for you to have that relationship with. There's also the advantage, if you think about EMIs, that if they are connected to several banks, and this is another piece of guidance I would give, then you will have the option to potentially open accounts and payment and banking services with more than one, with the advantage that you'll have a single relationship, you'll have maybe a single contract, you'll have a single technical connection in all likelihood, and then most importantly, if for some reason one bank applies a blanket debanking activity across a sector, you're not left unbanked. You have another option there, and you have a sort of this mitigation whilst you search for a secondary one to replace.
Brilliant, really sensible advice. And I want to come back as well to another point you made a moment ago, which was about encouraging firms in the sector to speak to their banks about avoiding any surprises. And I just, again, drawing perhaps a comparison to, if we think about when we have home insurance or car insurance, we're always very nervous about picking up the phone to the insurer and asking a question. And even though we may not be making a claim, suddenly our premium becomes much more expensive in the following year because we've literally just picked up the phone and perhaps asked a question or just had a conversation. Is that good advice to go and have a conversation with your bank? People I'm sure will be listening and saying, "Oh, I'm perhaps a little nervous of doing that because what I don't want to do is suddenly spook them or scare them in advance." We've had these relationships for a long period of time, and if I do that now, would I be in a position where they suddenly might change their minds about providing services for me in the future?
I think it probably depends. I think, as I said before, the more your bank understands your business, the more they can't fear the unknown. And so that's why I say if any of the profile of your business operation changes, then it's worth proactively informing them about that. There is always the risk of waking the sleeping giant or whatever, or the bear. But I would say it's more advisable than not to make sure that they're kind of kept aware of your business activity. Without a doubt.
No, that's really helpful. Brilliant. And again, just sort of picking up on a couple of other things that you said there, which I think have been really valuable. You talked about preparing a pack, which I thought was great. Again, we represent members, some of whom have been in the business from day one, so in excess of 30 years. Others are startups just entering the market, or even some about to enter the market. When's the right time to do this? What's the best way of approaching it?
I think at the beginning, when you're trying to get access back to banking services, you absolutely that's when the most forensic examination will be done.
Sure.
So that's when you need to have everything sort of wrapped up in a bow and can demonstrate that not only do you have demonstrably personal sort of risk management documents that aren't ChatGPT. And internal policies around money laundering and any other risk that you feel you're exposed to in your business. That's the time to have all that. But then it is just good practice to update that on a quarterly basis, and that includes things like ensuring that that pack and addresses all of the use cases of your business. It also includes making sure that everyone in your business is aware of those policies and has been trained and ticks off that they've been trained as well to make sure, so that you're sort of maintaining that institutional responsibility. And I think another reason why it's good just to maintain that is because at any point a bank could ask for an update on it.
Yes.
And they will do so. They will have sort of predetermined schedules where they say, each year, because of your category, we're going to come and just poke around a little bit. But of course, they can also do that ad hoc, and it's not unknown. So if your stuff isn't ready, then it's not going to look that great.
So preparation is key in this, and if you haven't done it already, I think the advice is to start something now. Yeah. In the event that the bank does start asking some questions and wanting to see evidence of certain processes or things in place.
Exactly. And it's it is a shame, but it is responsible business practice to do that, and it's the nature of the beast, unfortunately.
Yeah, and I'd say that I think the sector is generally, with the amount of regulation that's come out in the last couple of years in particular, people I think are sadly getting used to having to do more and more of this, whether it's risk assessments or whatever, and expecting regulators to kind of knock on the door and say, we would like to see evidence of how you've approached this particular risk. So I think it's practice that's being developed in other parts of the sector in response to things like the Online Safety Act in the UK, which seem to be good practice for dealing with this particular challenge as well. Indeed. Brilliant. So we've got some really helpful practical advice in terms of what people should be doing now. In the event that the company is told by their bank that they are no longer going to be having access to those services that they once were, so they've been rejected by the bank, what should they do? What are the immediate things that they should do upon hearing it? Because I think, again, we are hearing more and more of these cases, and I think if we've got some practical takeaways here that people can put a plan together, would be really helpful, Nick.
Yes, I think, and this is maybe where the industry can help itself as well, and perhaps the association at an industry level. I think going back to my previous point, if you have your pack showing responsible business practice ready, then at any point the worst case happens, at least you have that ready for an application for new banking services. And I guess the most important thing is to de-risk. So don't have a concentration in one institution, because one decision at a completely disparate level can or disconnected level can mean the end of your banking services and put you in a real pickle. So diversify, absolutely. Have more than one banking provider. Keep yourself informed as well as to the sort of sector-friendly banks as well, that offer that balance of responsibility, tolerance, expertise, because expertise is key as well. That does play a part in kind of the acceptance criteria and the speed with which your application can be processed. If you go to a bank that doesn't really have a portfolio in the sort of online dating world, they're going to be nervous about everything. But if you can go to a bank that has a portfolio and is used to understanding the risks, understanding the business profiles, understanding the business flows and how everything works, then those would be the ones I would prioritize.
Brilliant. That's really helpful. And I think that's a great point about looking at who the sector-friendly banks are. Although I guess the caveat is that can change depending on the leadership and priorities and risk appetites, etc. So one to keep on top of where we can.
Exactly.
Brilliant.
Exactly. And maybe this is where the the association can help as well. Just off the top of my head. You're not going to be able to offer any kind of accreditation because you're not financially licensed. So it's not as if someone's going to trust when if you put forward a member to a bank, you aren't a regulated entity, so that doesn't help. But you could potentially do a bit of investigation into the banks or the EMIs that do have some expertise here, that do offer that balance of kind of responsible governance, a good presence. Obviously I'm from a company called Navro, and we have a lot of mainstream business, alongside a little bit of sort of Forex platform activity and a bit of dating activity. I would say that that's typically a good profile versus perhaps a company that only specializes in high risk sectors with no mainstream whatsoever, because they themselves will be on the radar for their underlying banks, and they probably are not dealing with, they probably have a suite of banks behind them that are, the tier 2 or the tier 3 banks, because they are taking highly regulated or very high risk customers. So you definitely need to do some research and understand who are the banks who are connected out of the back. Is it, an unknown Lithuanian bank, or is it an HSBC or JP Morgan or something?
Absolutely. Yeah, no, that's really good advice. And I've made sort of a little note there, an action for me to take away. One of the things that we did look at, and of course, the ODDA sets standards. Our standards are currently being reviewed by Leeds University, and that will be published later this year, which we're really looking forward to. One of the things for me is as an association, to try and, I guess, educate people, and banks being a key part of that, of how firms in our sector operate, to give them some reassurance that there are these processes in place. Going back to that point, one of the things that did strike me a little while ago was whether there is benefit in sort of reaching out to some of those banks and saying, well, actually help us write our standards. So it gives you perhaps a degree of confidence. And I know every decision on whether to offer banking services is based on risk, and it's on a case-by-case scenario, but at least perhaps involving them in that process, would improve their understanding, but might start to give them some reassurance that there are some really good things that many of our members have been doing to make sure that they are incredibly low risk for fraud and other factors that we mentioned at the beginning of this webinar. I don't know what your thoughts are on that. I'm not saying it's a magic solution, but it just seems to be something that dialogue, talking is always a positive.
Absolutely. And for I think the more they understand the sector, the more they understand the good players and the measures that are taken by the good players when it comes to KYC on customers, when it comes to fraud and behavior monitoring, when it comes to other sort of risk mitigation practices, the better. So I think it can't hurt. We've spoken before, Simon, about the possibility of getting a kind of a subsector for the industry, an industry identifier, so that you've got dating as an SIC code, and then is it possible either with the card schemes for acceptance? It might be another conversation to have, where you petition for a company with a certain profile and standard to be classified with a sub identifier as well, to kind of denote that they are sort of responsibly managed and everything like that, and that could help as well, because it's not just banking services, it's sometimes kind of payment collection services as well, where it's not always the same type of financial institution, but card acquirers are also banks. They are subject to the same regulation, they're subject to the same licensing regimes. They also have the card schemes and their regulations behind them as well. So they're looking at businesses in the same kind of way. I would say they are generally better at looking at individual circumstances rather than just blanket sector permissions. But that might be a place to start as well with that conversation. But none of this can hurt, certainly.
Absolutely, yeah. And I think, just again, for those joining us, one of the things that we will be doing as an association is having those conversations with some of the card issues and the other institutions, as a way of saying, can we look at a subset of that code, that industry code, to differentiate the types of dating in particular that are offered out there. So clearly in the market, there are some that are very adult focused, which is not within the scope of membership within the ODDA. But for those more mainstream services, then where there's an opportunity to do that. And I think that's certainly something we're very keen to pick up and pursue in the days and the weeks that follow this webinar. So
absolutely.
Everyone,
let's not forget as well that banks are obviously commercial organizations and profit driven. And so, the more revenue opportunity there is in front of them, the more willing they are to listen to, conversations about risk management, etc.
Yeah, well, absolutely, and the sector is anticipated to grow significantly over the next few years as more and more people meet online, whether that's for friendship or romance. And so, from a commercial perspective, one hopes that it is quite an attractive sector for banks to be involved in and provide those services. And I think we just need to make sure that they are confident and happy that those processes are in place as well. Brilliant. Got lots of more questions to ask you. Just a reminder, we've only got about 20 minutes left, so it's absolutely flown by so far. But if people would like to ask a question, please do feel free to pop one in the chat or the Q&A, and we'll make sure we put those to Nick as well. I know Nick, I'm sure, will be happy to answer questions afterwards as well. We've talked a little about regulation. We've said obviously the financial services sector is very heavily regulated. Our sector is becoming increasingly regulated as well. In our sector, in relation to that, does it help? So we talked about the Online Safety Act. There's the Digital Markets Competition and Consumers Act as well. Having a sector that's highly regulated, does that make it easier for banks, or does it become more problematic because the risk potentially could be higher?
It's a double-edged sword. The absolute benefit is that it raises standards generally, and it exposes criminal activity, which is obviously, great. But as I mentioned before, the other side of that coin is that it's a new set of rules, an ever-increasing set of rules that banks need to be mindful of and across and ensure that companies in the sector are adhering to. Overall, it has to be net positive because at least it helps educate banks as well on what are the risks. If there are new regulations, if there are new standards, then it does educate, and so it can help them make those decisions, and hopefully in the future they will be a bit more subjective and a bit more friendly and say, okay, if you're in this sector, they're actually we're not going to treat the whole sector as one. We're going to treat it as two, because we have one that has proven adherence to all of the regulations and has provided us with evidence, and then we have those that haven't yet.
Yes.
And they can move from one to the other, of course, in either direction. But that would, I guess, be what you would want to achieve at some point in the future. So I think regulation and standards can definitely help in that way.
Brilliant. That's really helpful. Thank you, Nick. I was going to go to a couple of questions we've got in Q&A. So they've been popped in there, which is great. So the first one, great webinar. For those of us new to the sector, can you say more about current and likely future online dating debanking related trends in the USA?
As I said, the US is not my forte. I'm much more au fait with the UK and Europe, sure. Unfortunately. I think the factors will probably, some factors will be consistent across the banking world. So there are risk factors and there are risk scoring mechanisms in banks wherever they are. Sector is one of them, of course. Geography is another. Company size and history is another as well. So that's just another nail in the coffin for a business trying to get off the ground and trying to build. If you can't demonstrate a kind of a historic P&L and what appears to be evidence of your business model and all that kind of stuff, then it just is another, it adds another 10 points to the risk score and can put you over the edge. It's just unfortunate, but of course it does represent a higher risk for a bank if they can't see what's been happening and sure. and validate some of that. So those factors are common across the banking world. But sorry, I couldn't be more specific on the US.
No, that's perfect. But thank you, Nick. Really helpful. And then Mark's asked a great question, which we touched on a minute ago, but I think we looked at it perhaps from an association perspective. Mark's saying dating has been lumped in with erotic services for years. What can we do as an industry to help move away from this categorization? So we talked about how the ODDA can effectively engage with the likes of Visa and MasterCard around the industry codes. But Mark's question, I think, is about the industry more broadly, which I'd be, again, really interested in your thoughts on that.
Yeah, I think just going back to my previous point, I think if you can petition for a different classification based on standards, based on regulation, as I said, you're not licensed, so it's not as if you can accredit members. But if that can be, I think it's a fair ask to go and say, not in every sector. There's a whole range of top providers that are corporate level and everything is in place, and then right at the bottom, so that there's major car brands at the top, auto industry, and then there's some dodgy car lot round the corner, and they're also in the same sector. The problem is it's not seen as a high risk sector, but the fact is, obviously, there's a huge disparity in the way those businesses are managed, and obviously the same in the dating sector as well. So I would say probably the best avenue to pursue would be to try and get some kind of sector division there, so that the businesses which are not exposed to, for example, adult risk, etc., or the ones that can demonstrate good risk management practice, can be sort of classified in a different way.
Yeah, brilliant. And I'm just interested when you talk about the car industry there, because of course Jaguar Land Rover had one of the largest cyber breaches in UK history. So
yeah,
when we talk about risk,
no one's immune. Yeah, banks neither, right?
Yeah, absolutely. No, brilliant. Thank you, Mark, for that question. A really good one. And I think, as we said, things that individual companies can do, as Nick has described, but also us as an association, in making that point and continuing to try and push for that differentiation to take place. Again, just Nick, just some thoughts from you, really, and I guess looking into your crystal ball and about what's the future looking like. Over the next year to 2 years, what do you think is going to happen? And again, perhaps focusing on the UK with your level of expertise, but what do you think is going to happen? What can people joining us today expect?
So unfortunately, I think it's going to be. I don't think there's no silver bullet out there. So the process of onboarding with a bank, I don't think is going to get any easier. I think there are going to be ongoing reviews. Hopefully, debanking volume and debanking instances will not increase, but I don't see any decrease in regulation. I only see that going one way, and it's down, I would say, to the industries to educate and to communicate that that their industry as a whole has some very responsible actors in it, but I don't think compliance burdens in banks is going to go away at all. It's only going to go in one direction.
Yeah,
I do see that there is an increasing presence of VMIs. Definitely, some have specialist sectors, some are a bit more broad. Some are UK only, some are sort of have a broader licensing footprint as well. But I think they will be increasingly used by the banks to, as I said before, to outsource that compliance burden, and then offer that streamlined access to banking services. They're normally restricted to sort of accounts and payment services, rather than more credit and loan activity. It's normally about just money movement, money deposit, money settlement, collection, etc. But just basic transactional services. But of course, that's the bones of a business, basically, having money coming in and going out. I do see that increasing as well. I think that there probably will be a bit of consolidation, but I think it's attractive for the banks because they can outsource all that cost.
Yeah. Any sort of grounds of optimism? I mean, I know you talked about sort of more compliance, more regulation, but anything that is positive to look at over the next 2 years?
Well, I think this sort of increase in intermediaries is definitely positive, because it gives another route into banks that avoids all that time-consuming sort of onboarding nonsense. Typically, of course, your industry is born online. And because you're born online, you have your members have modern tech stacks. Obviously, with modern tech stacks, you can also have tech-driven risk mitigation tools as well in there. But if you're accessing banking services, then a lot of intermediaries will match that kind of API-driven interaction as well, rather than a bank which. I don't know if you've ever done a bank integration, but it's pretty heavy. it's pretty heavy. Whereas with an EMI, it's generally a lot easier, and then you can access a sort of suite of services. And then as banks are added to that suite as well, you can increasingly diversify as well. So I think that's a cause, for optimism. There is an alternative and probably easier route into getting banking services that also provides that diversification as well.
Brilliant. And just on that, in looking at the growth of EMIs, is there any advice you can give around how to select the right one? So are there some principles to follow? What sort of hints and tips can you share with our members to help them make sure they choose the right partner?
So I think apart from the obvious in vendor selection, where you look at commercials and you look at the operational capabilities, I would say there were probably two things that would give you a sense of the EMI standing in the sort of financial services world. The first, as I mentioned before, would be the quality of the banks underneath, because that is a very good indication of how that business is run. But also the licensing jurisdiction as well. So as I said before, if you have an EMI licensed in, not to pick on Lithuania, but just as a sort of edge there, the process by which you obtain a license there is much less burdensome than the process by which you obtain one in one of the tier 1 countries. So those would be sort of canaries in the coal mine, if you like, in terms of getting a sense.
And just out of interest, how do you find these organisations? Is it just a question as simple as going on Google, or is there what's the best way of finding the EMIs and companies that you want to partner with?
It's very difficult. It's probably in industry network, and here again the association can play a part. If you Google, it'll be very difficult to understand who does what. There are it would be almost impossible to distinguish between an EMI that is active only in mainstream sectors and then an EMI that is active only in adult, for example, because they wouldn't necessarily advertise themselves like that on the website. So a bit difficult, but word of mouth, network, that kind of stuff.
Brilliant. Yeah. And again, perhaps another little action for us to take away to see if we can support that in some way as well. Brilliant. 5 minutes left, and I think perhaps just to give you the floor now, Nick, with some final thoughts and anything else you'd like to share with those joining us today.
Yeah, thank you. Thanks, Simon. So I think thanks everyone for joining. My final thoughts would be, if you're in a situation where you have a single banking provider, I would put it as a matter of priority. I mean, there are always competing priorities for businesses of any size, but take a look now and start to think about your backup plan, because it's the worst thing to obviously to lose access to banking and transactional services. So make sure that you're not single bank dependent. Prepare your pack to show that you understand the risks to your own specific business, that you understand any regulations and legislation that impacts your business, and that you can demonstrate that you've successfully taken measures to mitigate against those risks as well. And that should put you in as good a position as you can do, and then just rely on Simon to sort it out for you at an industry level, I guess.
Thanks, Nick. Brilliant. Well, look, thank you for today. Massively helpful. Lots and lots of stuff to go through, and clearly an issue that's affecting our sector quite significantly at the moment and causing a lot of concern and stress. And I think we've recognised there are some things that we can do as an association in an attempt to try and prevent this from happening to other members that are part of the ODDA, but also some really practical insights and tips that Nick suggested for dating platforms to follow, which I think are really helpful as well. So please do take note of those. Well, as I said, we've got been recording this webinar. We'll make it available to everyone that has registered today. And Nick, you've got your contact details on the slide in front of us here. So I'm sure hopefully people will feel comfortable in reaching out to you if they have any specific questions. or learning more about Navro and the services that you offer to our sector as well. So thank you. And again, thank you for the questions we've had in today as well. So just really a big thank you once again to Nick from Navro and for everyone joining us today. We will be hosting 2 more very exciting webinars coming up on the subject of fraud, which we'll be sending out further details in the next few weeks, and look forward to those. But on behalf of the ODDA and from Nick, thank you once again for joining us today, and have a wonderful rest of the day. Thank you very much, everyone. Bye-bye.
Thanks, everyone.